Hi, everyone. So to the organizers, thanks for having me. I'm happy to be here. Hope everyone hasn't lost too much money on the tables just yet. The conference has just started. So my name is Matt. I work at Pangea Talent Solutions. We are a recruitment business that has specialized within the energy space for about 14, 15 years now, with offices in New York, London, and Dubai. I'm the VP there, heading up the Battery and Future Mobility Division. And I also work for Volta Foundation, who I imagine people know quite well here, as a program director for their workforce development activities. So things such as their career fair, the Battery Talent Census, which is being run right now, and the workforce report as well. So today, what we're going to be talking about is some of the industry trends, outlooks, and solutions, all from necessarily a talent perspective. So obviously, quick rundown, stuff that, market recap, funding, we'll look at key growth sectors, some tips for navigating the market with the upcoming administration, as well as how to attract and retain talent. So to start off, a bit negative, does get more positive, I promise. But it's no spoiler that the last 12 to 18 months have been challenging for some in the battery industry. As we can see from the short list above, which was not chosen for any particular reason, there have been layoffs and closures at almost every size, scale, and stage of company across the battery space. With this, we do see this as more of a correction from the unprecedented kind of boom that we've seen in the industry over the previous years before. However, on some more of it. There we go. Yeah. What we do see, though, is that in 2023, there were 142,000 jobs added in the EV and battery sector in the U.S. alone, with 20,000 of those being focused on construction. As you can see, we all know the battery belt, something that's been talked about in many of these conferences, is quite prominent on the graph of motor vehicle manufacturing employment growth in that year. But what was surprising to see is that in 2023, states such as Idaho, Texas, and New Mexico actually saw the highest percentage growth of clean energy jobs more broadly. These jobs, the job growth that we did see has primarily been around areas such as chemical manufacturing, electrical equipment and component manufacturing, as well as professional, scientific, and technical services. From the funding side, there has been a pretty drastic decline in venture capitalist funding from that boom we see in 2021, as you can clearly see on the graph, with the VC global investment dropping to an estimated $3 billion by the end of this year. However, despite that being a drop, it is still bigger than that big, still larger and more impressive number than what we saw prior to 2021. That said, from data pulled from Deal Room, we do see that the U.S. in particular across 2023 and 2024 is estimated to have an investment of almost $4 billion across those 2 years, which actually does keep us at a steady pace since 2018, having the total venture capitalist investment being around $12 billion in that time frame. So on to the more promising and hopeful data, as promised. While investment from the private sector has slowed down quite significantly at the global scale, thanks to government programs, there has continued to be growth in the U.S., specifically thanks to the bipartisan infrastructure law. There has still been billions being invested across the space that has support across both party lines, which is quite good to see. While most of this is grants, rebates, and tax incentives, it has still helped the industry grow despite economic challenges. So as you can see from this graph, again, a lot of that around the battery belt in particular, but still a good mix across the country, with a lot of the investment coming into the delivering of the clean energy. We're looking at the funding of clean energy manufacturing and workforce development initiatives, as well as demonstrations, EVs in both private and public sectors. What we will discuss in a little bit, though, on one of the layer sides, that despite it being bipartisan, that doesn't mean there is no risk to this investment. And the ability to actually get it executed and getting funded. So as we look towards the future, it is estimated that by 2030, there will be 20 times more battery production in North America than there was in 2021, at about 10,000 gigawatt hours of battery manufacturing capacity. This will bring additional green-collar jobs in the U.S. to will add around 300,000 by 2030 at the least. And that's obviously quite in the long term. In the short term, just from the bipartisan infrastructure law alone, and the awards and grants that have been given out already from the first 2 rounds, there's over 12,000 jobs that need to be filled in the short term for those specific projects. And of course, that's not factoring in the numerous gigafactories and other businesses who are scaling up their production, who have private investment, joint venture agreements, things like that. So still quite a lot of growth expected in the sector as we move forward, especially leading up to 2030. So when we look at the key growth sectors, the Center for Automotive Research actually surveyed 158 stakeholders in battery-related industries and found that 80% of them reported shortages in the skilled local talent market. Not really too much of a surprise there. And they noted specifically that electrochemistry, mechanical, and electrical skill sets were the major skill gaps that they found. According to NatBat and NREL, areas such as electrical equipment, component manufacturing, chemical manufacturing are going to be the biggest employment areas leading up to 2030, which is again in line from what we've seen in the past as well, and a bunch of the news that you've been seeing out in the market, right? So, however, from some of the other research that we've seen and trends that we've noticed, materials development and mining are areas that are also projected to grow by numerous outlets. However, it is an industry that does tend to lag behind when it comes to domestic supply chain expansion. Hopefully we'll see that as a change, especially with news coming from China, obviously, of potential export challenges that we're going to face. This is an area that we need to invest in quite heavily. So we'll see with new administration and some policy changes how that could go. And we're also seeing that battery recycling and second life use is going to be growing as well, given the number of batteries that are already out in the industry as well. So yeah, we're going to continue to see some investment there, of course, along the battery belt. That's going to be the big trend there, and all about manufacturing, production, bringing that supply chain onto U.S. soil. So obviously, we just talked about how there's quite a lot of talent and jobs that are going to be opening up in this space, and not enough people who can do it, at least who have that prior experience. So looking at the more long-term solutions, what are we doing? What can be done? So, when we look at groups like both the Foundation, New Energy New York, Michigan Workforce Training Education Collaborative, Battery MBA, those are just a few of the organizations that are really putting time, money, investment, integrating various programs and initiatives to help shrink that talent gap, bring education into the colleges, as well as helping train adjacent industries and other people to come into the space and give them that battery experience that we need in order to close not only the talent gap, but the global gap when it comes to our battery expertise and production. So then I would come down to the talent, right? So in the short term, right, here are what's things that businesses can do to address the talent shortage, right? And as well as not only getting the talent in, but keeping it as well. If it's not obvious, there are quite a lot of similarities, so bear with me, we'll run through it. But when you are on the hiring side of things, one of the key things is to be transparent, not in just relation to compensation, right, but also financial runway and long-term strategies for your business. When it comes to the strategy, you want to make sure you have a clear strategy, right? Be able to clearly define what your company and team are aiming to achieve and what stage you're at in those goals. Promoting a diverse and innovative culture, obviously, right? There's something that gets spoken about quite a bit at these conferences and in many industries. But it's important to keep an open mind and be alive to multiple versions of the right candidate. They might have a slightly different background than initially thought, or slightly different personality, but it's important to bring that in to your business in order to, again, continue to expand. And then respectful and efficient recruitment processes. Something that gets overlooked quite a lot, and as a recruiter, obviously something that we deal with, right? But in many cases, this is a person's first impression of a business, right? So when you look at things like ghosting, long interviews, drawn out processes, and interrogative interview styles, this is not only going to reduce your chances of hiring, but this will have a direct impact on your company's reputation, right? We're in a small industry. Everyone knows that. People talk. So don't overlook the bigger picture impact that your recruitment and interview processes could have, right? And the other thing is, of course, compensation. Now, I know a recruiter talking about money, what a shock. We're gonna, but the idea in this is not, and my suggestion in no way is to just throw more money at the problem, right? A bigger base salary is not going to solve all your issues, although some companies do try to run with that. For us, what we see is that the idea in order to attract people is to basically to obviously stay competitive with the rest of the industry and things like both Foundation's Battery Talent Census will come out with some updated numbers for you guys. And we'll talk about that a little bit later. But you also want to give them something to work towards, whether it be equity or some type of performance-based bonus, right? Give them something where they know that their impact is going to, their contribution is going to have a direct impact on their bottom line, right? And the last bit on attracting talent is to be proactive. The talent landscape is clearly tight and very competitive right now. It's only going to get worse, right? So passive approaches, just posting a job advert out there, is not going to be effective in attracting and securing the high caliber candidates on the market. And therefore, if you're not hiring the best people, the quality of your business, the success of your business is going to be directly impacted. So you want to make sure you're being quite proactive when you're doing your recruitment and going out there and finding and reaching out to the people directly. Not everyone's applying all the time. So now that you have the talent in there, right? How are you going to keep them from being headhunted from, quite frankly, someone like me, right? So again, transparency, right? But in this case, when you have your talent, you want to keep your employees informed on company developments, accomplishments, changes, and their career progression. These things directly impact them, and letting the rumor mill run is only going to make things worse. At the end of the day, this is one of the things that we hear from candidates on a frequent basis. I don't know I'm unsure about the future of my company. I'm unsure about the future of my career here. I want to take a look elsewhere, right? It's usually one of the first things that tends to come up for us. The other thing, clear strategy, right? Have a clear path forward and company mission that people can actually buy into, right? What are you guys looking to do? Keep repeating it. Let them know what you're going to be doing. And then promoting a diverse and innovative culture, right? We find that candidates are much happier when they have a chance to innovate, learn, and be heard, right? So let your team be creative, provide their insight, give them opportunities to upskill, and give them opportunities to prove themselves maybe in a capacity outside of their current job description. Of course, compensation again, right? What you want to be doing is providing regular raises, promotions, and implementing short-term incentive plans or long-term incentive plans. Again, those bonuses or equity packages that we discussed earlier. And trust me, I can tell you right now, it is going to be much cheaper to implement that with your current employees than to have pay someone like myself to hire somebody who's getting paid way more than the current person that you have, right? So these are the things, this is how you're gonna be able to keep your business running, keep your business successful, and let you focus on the things that matter to your organization, right? Other than constantly having to refill and upskill a new person and get them up to speed every single time. So obviously the last couple of years have been hectic. And after the recent election, right, what can we expect for 2025 and beyond, right? What's going to be happening in this industry? So the first thing is that government funding is going to be dialed back, right? While the new administration is pushing and to reduce foreign reliance, we can expect aspects of the IRA and possibly the BIL to be dialed back in some way, shape, or form, right? So the money that's not already out isn't necessarily guaranteed at this point. We'll have to see how things develop, but it's something to keep an eye out for, of course, right? However, on the other side of the coin, scaled back regulations in other areas combined with potential other policies could spur growth and investment from the private sector. In fact, we actually, as part of our work, talk to and look at a lot and analyze a lot of different venture capitalists and PE firms. And we have, in fact, started seeing that their direct hiring for their own organizations has increased, which is quite good. Could signal an increase in investment or more of an appetite to get back into investing from the private sector. Again, time will tell, but these things that we can look out for. But in any case, the new administration has been pushing to increase the domestic supply chain and manufacturing. So realistically, from my side, that would be the key areas for you to look out for, whether you're on your job search, looking for partnerships, things like that, whatever it might be. Now, for those on the job market or considering it, which I know a lot of people tend to be maybe a little bit behind closed doors, here are some of the key things that from my side, I would look out for, right? So what you want to look for is companies who have been and are generating revenue. Now, I don't want this to be confused with stability. It's just something that will be helpful, right? Especially as investment might not be so sure for the first half of the year, right? So, when you are looking at companies that have revenue, try to avoid the ones who go through perpetual layoffs or have a history of mass layoffs. I don't need to say necessarily the specific companies, but I'm sure we all know who they are, and you can do a quick Google search. If there's a company who every year or two is going through layoffs, particularly around the time that they're having their investor meetings, maybe avoid them. Not necessarily that the most secure for you. Businesses focus on domestic supply chain and production. So whether it be the materials, mining, anything realistically North American based should be a safe bet to be focusing on. Businesses with private investment rather than the government. Again, although some of these companies have already been awarded funding from the government, these payouts and the way that they're structured is that they're going to be spread out. They're not given in a lump sum. A lot of times they're in the form of reimbursement or they're paid out periodically. They're not guaranteed with the new administration coming in. So keep an eye out for things like that. But private investment obviously could be a bit more secure in that sense. And then lastly, American-owned businesses, right? I think that's obviously the song and dance, right, of the new administration, right? So companies who have foreign owners could face challenges under the new administration, whether it be, tariffs or, just generally getting policies or things pushed through. They might face some backlash. It's something you just want to be concerned about when you're looking through your job search. And then lastly, the QR code didn't show up, or did it? There we go. So lastly, I mentioned about the Volta Foundation and their battery talent census. So a couple of years back, I ran a battery talent salary survey, helped provide a lot of good insight into the market about salary benchmarking, understanding what fair compensation is, as well as some D&I insights as well. I'm working with Volta Foundation right now on the battery talent census, similar concept, but with a lot of resources behind it, hoping to release it early next year. Obviously, we're all within the battery ecosystem. So if you could take the time, either go to the Volta Foundation website, scan the QR code, take a look at it, fill it out. This will help provide a lot of insight in terms of what you should be getting paid based off of, your region, your sector of the market, whatever it might be, and just help the overall industry as a whole. But with that is all. Thank you so much.
Well, it's a great way of finalizing, this with the talents. I mean, it's very, very important.